Welcome to this Spokane housing market update. It's January 2023. Will this be the year that the market crashes and we all end up living in mud huts? Or will the market just continue to plug along as always? To find out, let's check in and see what's happening with the housing market both nationally and locally here in Spokane. My name is Phil Wells. I'm a real estate agent that likes to keep up to date with the market, and I want you to be as informed as possible too. In this video, we're going to start by getting a national picture of what's happening out there. We'll look at national pending home sales, then we'll look at mortgage rates and mortgage application rates. We'll then compare and contrast what's happening nationally with what's happening locally here in Spokane. We'll then move on and look at some real estate and macroeconomic news that stood out to me this month before trying to piece it all together at the end and figure out what it means for you. So let's get on with it. Looking first at national pending home sales. Quick note on these figures and the figures that I used throughout this entire video, they are the latest figures that are available, but there is a lag when it comes to reporting data, particularly at the national level. So, for example, the figures that we're about to look at detail pending home sales from November 2022. Contract signings were down 4% month on month in November 2022, which represents 6 consecutive months of month-on-month declines. Year over year, contract signings declined 37.8%, which represents 18 consecutive months of year-over-year sales declines. Where I am in the western region, sales dropped 0.9% on a month-on-month basis and retreated 45.7% in November 2021. Those are enormous year-over-year sales declines. If you are an investor, a cash buyer, or just a regular buyer that's been waiting on the sidelines, ask yourself this question: would you rather be refinancing when mortgage rates do eventually come back down, or scrambling around, competing in bidding wars, trying to find a home and generally having a miserable time? There is, in my opinion, a great window of opportunity that exists right now to get into the market while competition is low, before mortgage rates come back down and the market really heats back up. Here's what the National Association of Realtors chief economist had to say about November's pending home sales. Pending home sales recorded the second lowest monthly reading in 20 years as interest rates, which climbed at one of the fastest paces on record this year, drastically cut into the number of contract signings to buy a home. There are approximately 2 months of lag time between mortgage rates and home sales. With mortgage rates falling throughout December, home buying activity should inevitably rebound in the coming months and help economic growth. Let's move on and look at mortgage rates. Obviously, the majority of people don't have hundreds of thousands of dollars lying around to just buy a home. The majority of people are buying with the aid of a mortgage, so to keep an eye on mortgage rates gives us a really good idea of what direction buyer demand is likely to go in. Mortgage rates are also in a constant state of flux, so by the time mortgage rates make a headline, maybe because they made a 20-year low or a 20-year high, then they're already out of date. The best we can do is keep an eye on trends, and that's what we'll do right now. Sticking with November for a second, mortgage rates at the start of November were at 7.09%, and by the end of November they had fallen to 6.63%. The most recent rates that I could see have dropped even more to 6.2%. So we are heading in the right direction. As inflation continues to wane, and remember, inflation is the main enemy of the Fed, it's the very reason the Fed had to raise its funds rate. As that enemy disappears, we can begin to think about the Fed easing up on rate hikes and eventually reversing the Fed funds rate, meaning that mortgage rates in turn will fall too. So I will say it again, I do truly believe there is a window of opportunity right now to get a home at a good price while there is very low competition. Yes, you'll pick up a high mortgage rate, but it looks as though mortgage rates in the future do have a pathway to be low again. Now, I understand that if you're going for the absolute dream forever home, then mortgage rates have pushed that home out of reach for a lot of people. And it won't do just to buy a home, you want to buy the home. Now, I understand, yes, in this circumstance, you may want to wait. But it may work out perfectly for those just getting onto the housing ladder, or those looking for a fixer-upper, for example, or those that are looking for investment properties. And if you're a cash buyer, then you'll be able to combine your inherently strong position as a cash buyer with the fact that buyers have a very strong negotiating position right now to be able to buy a great property at a great price. I was having a lot of conversations with cash buyers over the last few years that said that they were holding off until the market came down some. Well, it seems that they were describing the current market conditions to buy in. And don't forget about 2-1 mortgages. If mortgage rates are still too high for you, then you could get a rate 2% below the current market rate in the first year, 1% below in the second year, and market rate in the third year. This loan product does require a sort of buy down, but do you think it's possible to have a seller fund that buy down in this market? I certainly think it is. Sticking with mortgages and looking at mortgage application rates. This is a huge leading indicator. After all, it doesn't matter what we think the impact of a particular mortgage rate might be on buyer demand. It matters what buyer demand is actually doing, how many people are applying for loans, how many people are applying for refinances, and so on. So let's look at the Mortgage Bankers Association and the November headlines really quickly to see what's been happening. For the week ending November 4th, applications were down 0.1% week on week. For the week ending November 11th, applications were up 2.7% week on week. For the week ending November 18th, applications were up 2.2% week on week. And for the week ending November 25th, applications decreased 0.8%. So you can see from the previous section that we had a drop in mortgage rates in around mid-November time. And it looks like that drop in mortgage rates had a direct correlation to the number of applications. So it seems we are entering the territory where mortgage rate drops are actually having a direct impact on applications. There was a time when a 0.5% drop at 7% rates didn't mean anything because it was still just way too high. But it does look like we're getting into that territory now. This tells me that there are people sat on the sidelines waiting to buy, and they will swoop into the market the second that mortgage rates and home prices hit the numbers that work for them. Looking now at my local market, Spokane. As I mentioned at the start of this video, it's really important to see what's happening nationally before we look at what's happening here in Spokane. Because Spokane isn't an economic island, and if it's behaving differently to how the rest of the US market is behaving, we need to understand why. These are actual sales for December, so be mindful we're comparing locally closed sales in December with national pending home sales in November. Given that it does take about a month to close a deal, then I would say it's a fairly accurate comparison, though not perfect. Sales were down 48.6% year over year, which is more pronounced than the national year over year decrease of 37.8%, and Spokane is performing worse than the overall Western region's year over year decrease of 45.7%. Median home prices are officially down year over year for the first time I've seen in a long time. We have seen median home prices fall here in Spokane $65,000 from their highs in April-May time when they're at $450,000, then now at $385,000, which represents about a 14.5% decline. I did suggest last month that maybe home prices are done falling after they were at $395,000 for 2 straight months, but it seems like they haven't stopped falling here, as they are down now $10,000 in total over the past 3 months. Regardless of whether prices continue to fall, the macroeconomic picture is clear. Mortgage rates have a clear direction now, and when they do begin to fall, home prices will come back. So if you are flexible on the type of home that you end up with, if building equity and building wealth is your primary goal, not necessarily finding the absolute dream home, then get yourself a 2-1 mortgage. Have your seller fund the buy down for that particular type of mortgage product, and wait to refinance in hopefully the near future, thereby combining a good purchase price right now with a good mortgage rate in the future. You'll also be avoiding the headaches of bidding wars and low inventory. The United States is still short millions of homes, and Spokane is short tens of thousands of homes. So that inventory shortage we experienced in 2020, 2021, and the first half of 2022 hasn't gone away. It's just been masked by the fact that rates are so high, buyer demand has been forced to dry up. Inventory here in Spokane is up to a 1.1 month supply. Back down below 2 months supply though, it has been above 2 months supply for the last few months. And don't let that 128% increase fool you. As you can see, supply is measured at current demand levels. If we had the same level of demand, i.e. the same number of transactions taking place as we had last year, we'd be well under a 1 month supply. Which illustrates further what I just said, that the low inventory phenomenon isn't over, it's just masked by low interest rates. And will rear its ugly head again when rates come back down and more buyers enter or re-enter the market. New listings are down 23% on a year-over-year basis, and that's what you'd expect. Sellers can sense the market is shifting back towards more favorable conditions for them, but it isn't there yet. So most are just holding off until spring to reassess then. Honestly, unless you absolutely have to sell, if you're looking for the most amount of money for your home, this is what I would advise: wait until spring and see what the situation is then. Overall, this means that Spokane is acting in a very similar way to the overall housing market, although admittedly it is a little bit worse. I would say though that right now Spokane isn't behaving like an outlier, and you can expect macroeconomic news to impact Spokane just the same way as it would impact the rest of the United States. Now I wanted to look at a few news articles that have stood out to me this month. So let's talk about inflation and the need for future Fed funds rate hikes. Inflation in November was 7.1%, which represents 5 consecutive months of month-on-month declines in the rate of inflation. 5 months is enough to convince me that there is a trend, and that trend is heading downwards. According to Forbes, the Fed has made remarkable progress, but we're not out of the woods just yet. They say that it often takes a while to exit an inflationary cycle. They use this article to compare and contrast the inflation we saw in the 70s to the inflation we're seeing right now. It's a good read, and I'd encourage you to check it out. The key takeaway for me in this article is that inflation doesn't just snap back into place. It's like a swimming pool after an earthquake. The cause of the movement may be gone, but the momentum is still there, and it will take a while to subside. So overall positive news on inflation there. So can the Fed drop its funds rate yet? Well, according to MarketWatch, one of my favorite publications, we're going to see the Fed funds rate up to 5.5% before they begin to head back down. The author in this article believes the reputation of the Fed has been tarnished by their failure to recognize the upward trends in inflation, and it's now biased towards overcorrecting. Remember when the Fed called inflation transitory? Well, that's what he's referring to there. The next perspective on inflation comes from Yahoo, which refers to Jerome Powell's words directly. The prediction from the FOMC meeting was for rates at 5.1% in 2023. After the meeting, Jerome Powell is quoted as saying, "To the extent we need to keep rates higher and keep them there for longer, and inflation moves up higher and higher, I think that narrows the runway. But lower inflation readings, if they persist in time, could certainly make it more possible. I don't think anybody knows whether we're going to have a recession or not, and if we do, whether it's going to be a deep one or not, it's not knowable." That doesn't fill me with a lot of confidence. It's a statement that really doesn't make a lot of sense. Lots of coulds, lots of possibles, and lots of I don't knows in there. It looks, though, that the consensus is for the Fed funds rate to enter the 5% territory before it can come back down. The Fed seems to want to make sure that the car is well and truly stopped and the ignition is off before it takes its foot off the brake. Now let's move on to some housing news and look at some market predictions for 2023. This article is from bankrate.com and compiles multiple predictions into one article, which is very useful for us, as we're able to see the worst case and best case scenarios in one place. They've also chosen to break their article up into very sensible subsections. Firstly, will mortgage rates continue to climb? On the high end of the spectrum, one professor sees the 30-year fixed mortgage at 8.75% across 2023. On the more optimistic side of the coin, another contributor sees the 30-year fixed mortgage at 6%, with the key caveat that this is entirely dependent on the Federal Reserve's ability to get inflation under control and ease up on its aggressive rate increases. So it seems there is a sort of consensus there on what direction mortgage rates are going to be heading in, and it's up, unfortunately. I'm not a professor, but I can look at trends, and from my perspective at least, it looks like mortgage rates are coming down, and the need to have the Fed funds rate is beginning to wane. Now, I'm not saying that we're going to see 3% mortgage rates next year, but I'd optimistically wager that we're going to see rates with a 5 handle in 2023. Next, will home prices drop? One contributor says, "I expect pricing to be relatively flat, increasing by only 1 percentage point. Another contributor says a soft real estate market with prices at levels lower than current levels will result. Next, there are plenty of potential buyers still patiently waiting to enter the market. Assuming home prices ease, you'll start to see some of these buyers emerge, especially the all-cash or lower loan-to-value purchasers who are less impacted by interest rate concerns." I absolutely agree with this last contributor. There are people out there waiting to buy but are biding their time. They want to see either mortgage rates come down to a particular level or home prices come down to a particular level where it makes sense for them to buy. Lastly, here is an infographic from Keeping Current Matters regarding home price projections from various contributors with an average of 0.1% growth in 2023. Just to note, that infographic is completely from outside the article, but I thought it was relevant to include. This article continues with more sections. Will Will 2023 be a buyer's market or a seller's market? Will inventory increase? Will homes be more affordable? And if you're interested, then please check out this article. There will be a link to it in the description of this video. The very last piece of news is cooking related. That is that the Biden administration is exploring the idea of banning gas stoves. Now, Washington State is bringing in a ban all on their own. From what I understand, new homes moving forward won't be allowed to have gas stoves at all pretty soon. And I've been saying for a while to my buyers that gas stoves are eventually going to be banned, so existing ones in homes are going to become a real selling feature soon, as they're probably going to be grandfathered in. So if you've thought about putting in a gas stove, then now's the time to do it before it's too late. Now, let's try and piece all this information together and see if we can summarize the market as we see it in January 2023. The big news is that inflation is trending down. We're on the 5th month now of consecutive month-on-month declines. Unfortunately though, 7.1% inflation is not normal. It's still far too high and we still have a long way to go. The Fed funds rate remains high at 4.5%, and many experts are predicting that we'll see the Fed funds rate into the 5% range before it can start to fall. Nationally, the most recent pending home sales that we can see are down dramatically on a month-on-month and year-over-year basis. In terms of Spokane specifically, sales are down and we continue to have low inventory. Prices here in Spokane are down, but there is some evidence that we're starting to ease up on price declines. If you're a seller, know this: there are homes still being sold, and there are buyers still buying homes. But expect days on market around the 1 month mark at least. Expect to have to prep your home really thoroughly for market and keep it in a good condition for an annoyingly long period of time while showings are going on. Understand that you will be on the weaker side when it comes to negotiations in most cases throughout the transaction. If you're a buyer, I'm convinced that we're approaching the bottom of the current market cycle, and as inflation gets tamed, the Fed funds rate can begin to think about coming down. Mortgage rates will start to come down naturally on their own, and when the Fed funds rate does come back down, mortgage rates will tumble. All this will mean that becoming a buyer will become less and less enjoyable as bidding wars come back and low inventory becomes a thing again. So I maintain there's a window of opportunity right now to get a good purchase price, and in the future, it might take 6 months, it might take 12 months, it might take 24 months. But at some point you will be able to refinance and combine your good purchase price now with a good mortgage rate in the future and really set yourself up for success. That's it for this video. I hope you gained from this video. If you did, please like and subscribe. That actually does help me out. If you're looking at buying or selling here in the Spokane market, then please give me a call, shoot me a text, send me an email, or find me on Facebook or Instagram and send me a direct message. And I would be honored to work with you. Like I said, my name is Phil Wells, and thank you for watching.